Welcome to my Company of the Year 2023 video conference. We'll get started shortly, and I am very excited to share this with you because even if you don't want to invest in an individual company, it is higher risk, higher gain. You do have to babysit the company. The entire industry is super hot. So this is a great video conference, June 29th, 2023, and we'll get started momentarily.
So over the past few weeks, I have looked at cybersecurity, artificial intelligence, electric vehicles, solar. So which one of these industries did I find my company of the year? And which one of these industries are ripe for you adding as a hot slice of your nest egg? Well, let's unpack it. Let's look at it. First off, you can find all of my most recent blogs on these articles, on these various industries. Just go to nataliepace.com/blog, and whatever blog is already featured, all you have to do is go to the bottom. So this is the one that's featured right now, bonds lost more than stocks last year. You definitely want to read this one. But scroll to the bottom and you're going to see a list of my most recent blogs. So you can link to my report on EVs. Tesla's Model Y is the best-selling car in the world. It's true. You definitely want to read that blog. My 2023 Company of the Year. There's a cybersecurity blog right there, and there's an artificial intelligence report as well. So let's start with artificial intelligence because nothing is hotter on Wall Street right now than NVIDIA. So here's the artificial intelligence blog, and you can read it, but I'm going to go ahead and also show you the artificial intelligence report card. So as you can see here, it didn't look great in terms of year-over-year sales growth. Even NVIDIA that went to a trillion valuation and added over $100 a share since its most recent earnings report, it reported a reduction in revenue in the most recent quarter. Now, the reason that investors got excited is that it's expected to have a blowout next quarter. The second quarter is expected to have $11 billion in revenue compared to $6.7 billion a year ago. That would be up 64%. And that would definitely put it at the top of the leaderboard here. The problem is valuation. Should a company that earns only $5 billion a year in net income be worth $1 trillion? And as an example, that didn't work out so well for Tesla last year. So Tesla soared to over $1 trillion valuation, and then it lost 67% of its value. And of course, now it's back to a decent value. We're going to look at Tesla and electric vehicles in just a moment. But that's the issue here, is that Wall Street is way overvalued. It's funny, I had lunch with an investment banker friend of mine a few weeks ago when NVIDIA reported earnings. He was very excited about it. And I said, but aren't you considering that it might be overvalued? He said, oh, we're valuing it for 3 years from now. But in between now and then, we could have, we see it over and over again. We see the Wall Street roller coaster. So be very careful chasing these headlines because nobody is mentioning just how overvalued this sector is. Now, if you are interested in artificial intelligence, which is definitely an industry of the future, it's just that right now, as companies are battening down the hatches, because they are expecting weaker growth and maybe a recession in the second half of the year, maybe this is an area, clearly, we're seeing a lot of companies that are having reduced revenue, that we might see reduced revenue or weakness in. NVIDIA might be the exception, but still is a company that maybe it gets to $10 billion. Should it be worth $1 trillion? So at some point, we do see these lofty valuations. And it's not like it just goes down to where you bought it at. It can blow through that and really have a severe fall. So be very careful with these lofty valuations. If you're interested in artificial intelligence, you could think of a fund like IRBO. So let's go ahead and take a quick look at that on iShares. And again, the reason we use iShares as an example is that BlackRock is at least got a AA rating. So we want to make sure that we are buying our funds from highly, high credit worthy fund companies too. So this is the robotics and artificial intelligence. And if we click on the holdings, we are probably going to find NVIDIA in there. Oh boy, we're seeing a lot of different holdings in there, but let's take a look at all of them and just see if we can find NVIDIA. So clearly, if you just want an NVIDIA play, it's going to be a better idea just to invest in NVIDIA. But if you want to get the whole in artificial intelligence sector, then this could be a good option for you. What we're saying for these particular indices or industries that are overvalued severely right now, as artificial intelligence is. It's not just NVIDIA. If we go back to that stock report card, you're going to see a lot of very high values, right? Advanced Micro Devices, price earnings ratio of 561, had $1 billion in revenue, net income last year, and it's worth 180 billion. So these are pretty lofty valuations in a lot of them, not all of them. Clearly, Intel and Qualcomm are not extremely overvalued, but they're also losing revenue. So that could be a problem with their valuation too. So moving on, let's take a quick look at our electric vehicles, right? And as you can see here, that's a different story. This one is one where the sales growth is very explosive, especially in BYD and Li Auto, both of which are Chinese electric vehicle automakers. Then we have Tesla, and then we can go down to some of the other companies. Now, the issue, and again, I do strongly encourage you to read my blog on, Tesla and these electric vehicles. But the issue here is that China is by far the biggest market, followed by Europe and then the United States. But the competition is fierce. As I indicated in the blog, Mary Barra is saying, look, we've got 100 companies at 50% utilization. So it's really fierce. Now, NIO and XPeng have recent launches, which they believe is going to take them back up the leaderboard. They've been very far down the leaderboard in the last quarter. And we should see, maybe we'll see something with them. Tesla is one that obviously is still doing very well. It had the best selling car in the world with the Tesla Y, but it still was not number one in China. BYD is number one, and then followed in very far second by Tesla. But as you can see here, a lot of these are very lofty valuations. So again, Tesla at $13 billion in net income and almost worth $1 trillion again. Again, the last time it hit its $1 trillion valuation, it lost almost 70%. It lost 67%. So when you see these kind of extremely lofty valuations, and by the way, autos don't do well in recessions. So that's not one that we put as our company of the year. But in my blog, I did note that, if you were interested in individual ones, the ones that had the better valuation might be something like NIO. Of course, that's on the expectation that its product launch is going to go well. Now, it did get great reviews in Europe, and I think it won Car of the Year in Sweden. So NIO is a car company to watch. It's selling in China and in Europe, not yet in the US. The US, I guess, has blocked out most of the Chinese automakers. But here again, you could actually do you could do an electric vehicle ETF if you just wanted exposure to all of them. And it's hard to get exposure to BYD, which is the top seller in China of EVs, because it's not publicly traded in the US. IDRV has a lot of electric vehicles and other technology, such as self-driving technology. And if you click on the holdings, you're going to get exposure to XPeng, Tesla, Li Auto, and even BYD is in there as well, right there. So this is another one where, again, if you feel like it's a lofty price, you can go ahead and dollar cost average in there. Now, we are teaching you how to do this sort of thing in our pie charts. Remember, you have 4 hot slices in your pie chart, so you could have electric vehicles and artificial intelligence and cybersecurity and solar. We're going to keep going. Let's take a look at cybersecurity. Is that one that you want to have? So here's the cybersecurity stock report card. And this is one that's showing great promise in year-over-year sales growth. When you think about it, when companies are cutting back because of the anticipation of a recession, they may be able to cut back on artificial intelligence, which is something that might help them compete, but they can't really cut back on cybersecurity, because if they have any customer data, and certainly if they have credit cards, they have to protect it. They're going to get in lots of trouble, not only with their customers, but in other ways as well, if they are not properly protecting this data. So you're seeing cybersecurity year-over-year sales growth very strong. However, this is another one where we do see pretty lofty valuations. A lot of these are cash negative, so we have to go to the price sales ratio, and a lot of those are still very lofty valuations. So I would just say, again, if you're interested in cybersecurity, rather than trying to pick one, why not just go for the cybersecurity ETF iHack? And this is another one. Again, if the prices are very high, then what you might consider doing is, again, dollar cost averaging into it if you don't already have this one. If you do have it and the price went so high and your one slice becomes 2 slices, it's helping you. It's saying sell high. So you can sell that second slice, capture gains, keep your slice. That way, if the prices go down because we enter a recession, then you have the liquidity and also the emotional fortitude when your slice becomes a slipper to buy low. So our pie chart system is a buy low, sell high plan on autopilot that takes the emotions out of it. And when you're doing that and rebalancing once, twice, or 3 times a year, it can help you to capture your gains. We want to have capture gains mentality, not ride the Wall Street roller coaster or stop loss mentality. That's another big deal as well. So that's our cybersecurity story. So that leaves us with solar. Now, when I did the solar stock report card, you can see that some of these companies are having exceptional growth. But again, this is another one where across the board, we are seeing a lot of revenue growth. So which one of these did I name as my company of the year? Let's take a quick look at that blog right there. And yes, it is the one on top, Emerin. Now, this is a micro cap. As you can see, the year-over-year sales growth is 266%. This is a company that does solar projects around the world. You can read up on it. Now, the pluses and minuses, it's super hot and it's a pretty low price. So this is one, because it's very close to cash negative, we have to look more at the price sales ratio. Now, it could be lower price and we'd be a little bit more excited, but even at this price, it could be pretty exciting. Let's take a quick look and see where it is right now. Sorry, that's not Sol Emerin. There we go. So you're going to even buy it for a lower price than it was when we looked at it on our stock report card, right? Now, this is one that has shot the moon. So you don't want to do limit orders on this one. And as you can see from where it went, as high as it went, when it was super popular, it went almost $34, right? That's a 10-time potential. So you are going to have to babysit this. It's a micro cap, so that means you really have to babysit it. But if this company is actually able to do everything that it says it was able to do, And I did look at its press releases, and it does have a bunch of sales that would support what its projections were. Then this is one that we think could get very popular with investors, and it certainly has in the past as well. So Amarin is our company of the year, with the caveat that when you have microcaps in today's world, that they really can get hammered, right? Now this one already has been hammered, and it still has liquidity, and it looks like it's got all the potential to achieve its very lofty expectations. So this one is our company of the year. But again, you don't want to bet the farm. With individual companies, it's a good idea to use education or fund money, at maximum a hot slice, but do remember that you do need to babysit it. So I'd have a stock app on my phone. I would have stock alerts. So if the price starts going up, I'm alerted immediately. Remember that when these stocks do shoot the moon, they tend to go there and then come down really rapidly. So if it goes to 30 and then by the time you get it, it's at 20, I would still say capture gains. All right, so Amarin's my company of the year, but we have a lot to choose from. And clean energy, specifically solar, is absolutely an industry that's super hot, as we can see from that solar stock report card. So here again is another potential for the hot slice. Now, if we're looking for an exchange traded fund, the clean energy exchange traded fund is ICLN. And this is another one where you can dollar cost average into it if you haven't yet been exposed to it. So if we click on the holdings, you're going to see a lot of solar there. Wind isn't quite as strong as the solar is, but you're seeing a lot of the companies that we have on the solar stock report card are actually listed here as well. One quick tip. Now, clean energy, this ICLN, it actually quadrupled off of the lows that it saw in the pandemic. So again, capturing gains is key. You really want to have the pie chart system in place and regular rebalancing, because if you bought low at the pandemic low, and then it shot up and quadrupled by January of 2021, now you have 4 slices. It's saying, sell high. You sell 3 slices, you keep that other slice, and then if it goes back down, you have the liquidity and the emotional fortitude to buy low again. So we'd love to see you at our next retreat. Just a quick shout out, because we have the free gift deadline tomorrow, Friday. So if you're interested in learning more about hot industries, the pie chart system, regular rebalancing, and what's safe in a world where bonds are losing even more than stocks, then do join us at our next online financial freedom retreat. It's going to be October 7th through the 9th, but if you register by June 30th, which is Friday tomorrow, you get a free coaching session valued at $400 and the best price. You can use the coaching session now if you'd like, to make sure that you are safe before you go on your holiday, and then come back in October and fine tune everything by getting the life map that we all should have received in high school. So here's more information on the retreat. Just go to nataliepace.com, and if you scroll down, you're going to see that retreat flyer right there, October 7th through the 9th. You can read about testimonials, you can check out the prices, you can learn what you're learning, all of that information, the days, the times, etc. So again, the best price, and if you put a group together with your family, you're really getting amazing prices. All right. Also, one last thing I want to say is, please do join me on social media. If you are not interested in joining Twitter, then visit nataliepace.com regularly, and you can scroll through my Twitter feed so that you can make sure that you're not missing anything that's very important. Okay. So I always link to the article where you can learn more. Lots of different information and blogs there. You can follow me on social. There's Facebook, Twitter, Instagram, LinkedIn, email, my podcast, Spotify, Apple, and of course the YouTube channel. Now this video conference will be on YouTube at youtube.com/Natalie Pace. You can watch it back and share it with your friends. It's free. Thanks again for joining me. I'll see you probably for another one here in, well, actually, the next one will be in July, and we'll try to do one in August as well. And have a lovely week. Great 4th of July.